Hey everyone, Antonio here with Everyday Tone. Last episode we talked about starting your account. Now let's start talking about investing. This is not financial advice. This is for educational purposes only. So let's get to it. Before I actually started investing, what I did was pay down the debt that I had. Why did I pay down debt? I had credit card debt. I had some credit card debt. My credit card debt was 18% of interest a year. That's a lot of money. So if I started investing and my return of my investment was 12% a year, that's the average between 8 to 12%, but my interest rate was 18% on my debt, I'm paying more debt than I'm making money. So to me, it was a loss if I did that. So I started with paying off my debt. Okay, now let's get into it. Let's get into how I build my portfolio. Before I started building my portfolio, I asked myself, what kind of investor do you want to be? Do you want to be a risky investor? Do you want small risk, high risk? The more risk, the bigger the return you're going to have. But also it means the bigger the possible loss. So when I invest, I'm thinking 10 years down the line. I only buy companies that I think are going to be around for 10 years, at least 10 years. So if I'm going to buy a company, if I'm putting you in my portfolio, I'm going to hold you for 10 years. So I invest wisely. Here's a sample of some companies I own in my portfolio. I have growth companies and value companies. Growth companies will take the profits they receive and invest it back into the company, whereas value companies will take some of the profits that they receive and distribute it amongst their shareholders. That distribution is called a dividend. You can take dividend in form of cash, or you can take dividend in form of reinvestment into the company. I personally receive this distribution in form of dividend reinvestment into the company. This feature needs to be turned on in your account. And by having this feature turned on will really help you build wealth over time because you will allow compounding to do its work. There are multiple ways of investing in the stock market. You can invest in funds. Fund meaning you're investing in a basket of companies. Example, VOO stands for Vanguard SP 500 ETF, which means that the top 500 companies in the stock market is in this basket. Then we have VGT, which stands for Vanguard Information Technology Index Fund, basically meaning that this fund has top IT companies in them. Then we have stocks, such as Apple and Microsoft. When you invest in a stock, you're investing in one company. Let's take a quick look at the Vanguard SP 500 ETF. On the left side are the top 10 holdings of this fund. Examples such as Apple, Microsoft, Facebook, Google, etc. And then on the right side, we see how this fund has performed in the last 10 years. Whenever looking at this graph, to me, it looks like it's a safe fund to invest in. It has steadily increased. Now let's move on to Vanguard's VGT fund. On the left side, you see the top 10 holdings. It's a little different than the VOO fund. Some of the different companies we have here is Visa, Nvidia, MasterCard, PayPal, Intel. And on the right side, we see how this fund has performed in the last 20 years. You can see again that this fund has also been steadily increasing. Now let's move on to a stock such as Apple. The graph here is showing that Apple has steadily increased in the last 30 years. These are the kind of companies that it's a great idea to invest in. Companies that are steadily increasing. Let's move on to Microsoft. Again, Microsoft looks like a great company to invest. It has steadily increased in the last 30 years. There are many ways to invest in the stock market, be it stocks and funds, or funds alone. I like the approach of investing in funds and stocks. We talked about two funds, which were VOO and VGT, great funds that represent the whole market. Then we talked about top dogs such as Apple and Microsoft. Those are two great companies to invest in, and I personally invest in those companies every month, at least one share a month, or whatever I can purchase. I know that building wealth takes time and it's not going to happen overnight. It will go up and it may come down, but in the long run, I know wealth will be built. So you clicked on this video because it might have looked interesting and you want to start investing. So it motivated you. Harness the motivation right now because it's a feeling and feelings go away. Harness the feeling right now and open up an account. I'll see you in the next one.